Rudi, welcome back to the show. Good to see you again.
Great to be back, Dan. It's been a
It has
while.
been a while. It's been too long. We should have had you back by now. But it was great running into you. You know, it's funny. It's been a while, but if I hadn't run into you at Rick Rule's conference about a month or so ago, I don't even know if I would. You might not still be here. So that's my bad. Um, but it was good to run into you, and I thought that maybe what we do this time is, since it has been way too long, is sort of reintroduce you to our listeners a little bit. They're somewhat familiar, but I'm willing to bet that they'd like to hear the story once again. But what I'm sort of more curious about, that I know less about, is Rudi before Seabridge. So before the company that you've been with, that you founded and been with for 25 years. Um, what was that guy doing?
Well, we're going way back on time
Yeah,
on that one, Dan. It's been
yeah.
25 years since we launched Seabridge, but brief history. Born and raised in New York City, immigrant dad. Um, got into Columbia University more because of my backstroke versus
Mhm.
my grades. They needed a swimmer with backstroke at the time. And at Columbia, I studied mining engineering, got a BS in mining engineering, and then I stayed on and did graduate degrees in mineral economics and finance. I've been in the gold sector my entire career. Matter of fact, early on in my career, I was actually involved on the bullion desk at Phillip Brothers, trading gold contracts and physical gold. Um, I am a follower of the gold market, a student of the gold market, uh, but what I really have been focusing on over the past 25 years is trying to create value to shareholders interested in investing in gold. And we formed Seabridge back in 1999, trying to build what we thought would be the industry's best leverage play to a rising
Hmm.
gold price. And on that, we have delivered.
I would say so. Um, I just think that just sort of taking a step back from Seabridge, it's just, as we were talking before we hit the record button on this podcast. Uh, it's just so unusual. Like when I think of smaller mid cap mining company, I think, well, here's a couple of geologists with a piece of moose pasture looking to get paid somehow, and they don't care if they create any real value. So when we find a guy like you who's really interested in creating long term value like this, and you've been at it for 25 years and have done it, um, it's sort of unusual. It's like, ah, you know, a breath of sanity and fresh air in the mining industry where you don't expect to find it. Um, I guess when I'm asking about like you before Seabridge, it makes me, wonder like how did this guy not wind up like all the other geologists looking to get a paycheck? That maybe that's the real question.
Well, we learn a lot more from our missteps and our mistakes than our successes. And when I look back in my career, I was running a company back in the 1990s called Greenstone Resources. We built three mines in a 5 year period in Central America: Nicaragua, Honduras, and Panama. We created a lot of value over a short period of time with that success, and then things blew up. The gold market went from $400 an ounce down to 260 by 1999. Two of our projects were actually expropriated by the governments of Honduras and Nicaragua, learning how real political risk was in our space. So coming off the back of that experience, it was humiliating. It was hard, uh, but I pulled up my pants. I said, "Okay, what did we learn from that, and what could we do next from those learning?" And that's was the basis of Seabridge. Our industry, as an industry, could be the worst allocators of capital of any industry on the planet. The amount of money that gets spent, not just by the junior companies, but also by the senior companies in terms of
Hmm.
shareholder dilution, is
Hmm.
enormous, and yet they're not offsetting that dilution with value. So from day one of our guiding principles at Seabridge was to try and minimize equity dilution, willing to take on equity dilution, provided we were offsetting that dilution with value. And we defined value simply as growing ounces of gold per common share over time, with the thought being that the more gold we can provide on a per share basis, the better our share price should do in a rising gold prices. In addition to that, learning how real political risk is in our space, our entire focus is on North America. We will not go anywhere outside of the United States or Canada.
Well, you learned that lesson well, didn't you? um,
It was
yeah.
hard.
What is that? What happens in that moment? I'm very curious. Just as the mechanics, like you wake up one day and the government says we own this, and that's all there is to it. Do they show up as soldiers and kick you off the property, or what happens?
No, so this was an interesting one. So the we had raised a bunch of money at Greenstone using bonds that we thought were secured against the
Mm-hmm.
project. So all these bondholders basically bought bonds based on security. That's what financed the construction of the mines. All of a sudden, the governments say, no, you don't own the mines anymore. And the bondholders say, well, what about our security? Well, that's no good down here. And basically, it went from a reasonable valuation to essentially zero overnight. Now, it also didn't help that uh, during that period of time, the gold price went from above 400 down to 260, and we had a hurricane come through Central America, devastating our supply lines. So it was a rude awakening on what risks you face in the mining sector, not just political risk, weather risks.
Gold price, yeah.
It's
Uh,
just a lot of risks
yeah,
in mining.
it's a risky, risky business. Um, and actually, one of the things that I've done for my readers is told them, generally speaking, unless we find a really high quality company, and we actually have found um, some of those, we're going to stay away from the actual business of extraction of mining itself, and we're going to stay on the prospect generator end or the royalty end, and of course those two make a good business combination. Um, but that's not your decision, is it? Though you're in the mining business.
In the mining business, but I will never build a mine
Okay,
again.
there you go. That's
I kind of view that as the value destruction phase of the business, when you think you have everything going the right way, then you find out, oops, my metallurgical estimates were not correct. Oops, my tons and grade were not correct. Oops, it's taking longer to build this mine because of government opposition or local opposition. Right from day one, because of my experience at Greenstone, we said we will never build and operate a
mhm.
mine. Instead, we will partner up our projects with established producers at the right time, or sell our assets over time, generating cash proceeds from those sales, and also keeping residual interest in the form of streams, royalties, or net profits. And we've done that again and again over the past 25 years with success.
All right. Um, I like the sound of all that.
Yeah, Rudy, you don't it doesn't
So
strike me as a particularly stressed out person, given you're a CEO. Now that may or may not be true,
that's
but
right.
does that just come from these lessons that you've learned, and like just I feel like if you're fully committed to creating shareholder value, that that kind of takes care of a lot of other problems, potential problems.
Yeah, I look. I mean, I'd be lying if I didn't say there are stressful moments from time to time over the past 25 years. I mean, for sure. But it's having faith in your people. We have an unbelievable team of senior executives at Seabridge that came from the larger mining companies that have built mines successfully, that know what they're doing. And also, we've assembled a number of assets that are world class assets. In fact, our key asset is a project called KSM in northern British Columbia, that today is the world's largest undeveloped gold project as measured by reserves and resources. And if you ignore our gold and just look at the copper at KSM, it's the third largest undeveloped copper project in the world.
Wow.
So having an asset like that in a time when the gold companies need new reserves because they're running out, and the copper companies need new mines because copper is in huge demand going forward because all these green energy initiatives, um, I sleep pretty well at nights.
Yeah,
Yeah, and you have one of the things I learned to appreciate over the years is the wonderful leverage that you get with ounces in the ground, versus having to actually, build yourself and operate yourself, an operating mine. Like that might be, in fact, aside from, royalties and prospect generation, just that one fact might be like one of the most consequential things that I ever learned as an investor looking at mining. And to me, like that's what I see. That's how I think of Seabridge. You know, these people understand. They seem to understand this insight that I feel has changed my view as an investor. You're the best leverage is, ounces, 2p ounces in the ground, right? That's what it looks like to me.
Yeah. Yeah, and you look at our ounces per share right now. If you ignore the copper, silver, and moly we have at KSM, we have over 2 ounces of gold in the ground per common share. Today we're trading at $14 to $15
Oh,
per share.
ignoring the other metals. So
Our
it's not
in-situ
it's not equivalent. It's not gold equivalent. It's gold.
no, I first of all, I never liked the word equivalent to gold because there
Me
is nothing
neither.
in the world equivalent to gold.
That's right.
It's unique. But if you so here's another way to do it. At Rick Rule's conference that we met each other again at was I did a presentation looking at all the metal we have in terms of gold, copper, silver, and molybdenum in the ground, not yet mined, still needed to go into production. But all that metal in the ground at today's metal prices is $8,000 worth of metal per common share.
And how much are the common shares?
$15
There
a
you
share.
go.
So this is the concept of optionality and leverage.
That's really cool. I'm glad to hear that you're not a fan of gold equivalents. It's always kind of annoyed me. I mean, people use it like crazy, and even like really really good people who were there at the conference giving presentations and have really good assets. It's just a widely used thing that always. It's like when people talk about EBITDA. I just I get a little hot under the collar, a little uncomfortable with it. Um, but it's nice to find a kindred spirit in that
I will
regard.
agree with there's no gold equivalent to
So
Dan.
it,
Yeah.
yeah, all right. We're one. We're of one mind. Um, so maybe I'd like you to describe for our listener. We're talking about gold ounces in the ground, and with some amount of confidence, right? How do you get that confidence? Because we're not there's not a mine dug, right? But there is of course a way to establish, um, you know, with reasonable certainty that there's a lot of metal down there, and maybe just if you could characterize that process just for our listeners so that they know why we're talking about this gold in the ground with such confidence.
Well, the easy answer is because from the beginning, when we acquired KSM in the year 2000 to today, we've now spent over $1 billion Canadian on advancing the project, not just in terms of exploration and defining ounces, but also through engineering studies to demonstrate economic
Mm-hmm.
viability. It's one thing to have an ounce of gold in the ground, but what's it going to cost you to get it out of the ground relative to the gold price? That's a critical aspect. And also, can you get your project permitted? We've taken this project not only through exploration and engineering, but this is one of the few large projects in the world today that's actually fully permitted. We received our environmental assessment approvals in 2014, and now we're working the government to have those permits valid for the life of the project.
So I want to make this a little more tangible. So let me ask you that, like, how many holes have been drilled in KSM at this point? Put it that way.
Oh, hundreds and hundreds and hundreds, hundreds of thousands of kilometers of drilling. What's unique about
Impressive.
KSM also, it's not a single deposit asset. We actually have 5 deposits at KSM. In fact, KSM is a district. It's a district with gold, copper, porphyries where we own 100% of the district. So each of the deposits was valued separately with exploration first and then engineering, metallurgical test work, and then combined into a single project in terms of defining how the metal would come out of the
Mm-hmm.
ground here, the capital that would have to be spent, what the operating costs would be, and then what the profitability would be on this project. So all of that work has been done. We did a pre-feasibility study in 2022 that defined a project that's going to average over 1 million ounces of gold production a year for the first 33 years of the mine life, as well as a lot of copper and silver. And the all-in cost of production per ounce of gold produced, which includes over $6 billion of upfront capital, over $3 billion of sustaining capital over the 33-year mine life, the reclamation costs, the closure costs, and the operating costs, net of copper byproduct credits, is that today's copper price is about $500 an ounce per ounce of gold produced. With a gold
Wow.
price at $2,400, the margins are
How
phenomenal.
is it that what's the disposition of KSM? Do you still own 100% of it at this point?
We do. We've made it very clear many years ago that this is a project beyond our capabilities. This is a project that's going to require the involvement of a major mining company, either a major gold mining company, or because of the copper we have, a major copper mining company. So we've been engaged with joint venture discussions now with the leading mining companies for many years. We've gotten close a few times. We've turned down a number of proposals over the years, but we're now at a point where the work we've done, we think we can put it out in the best light possible. So we're now running a formal joint venture process being led by RBC Capital Markets for us. And we now have 6 of the world's largest mining companies at the table looking at this as a joint venture opportunity where they would come in and do the heavy lifting, complete a bankable feasibility study, and then make a construction decision and raise most of the capital
increase
to build
like
the mine.
demand for copper like how big of a part of the discussion is that for you?
It's huge. My belief is we're more likely to do a deal with a copper company or a company focused on copper than perhaps one of the larger gold mining companies. Although we have a number of gold companies engaged with us, you look at this project. We've really just scratched the surface in terms of what this project could produce in terms of metal flow. We have 12 billion tons of economic resources at KSM. Those 12 billion tons host 160 million ounces of gold and 59 billion pounds of copper. The mine plan that we have out there now is limited by what we have approved in terms of tailings capacity. When you mine the ore, you run it through the mill, you have to dispose of your tailings. And right now we're permitted for 2.3 billion tons of tailings. We have 12 billion tons of economic resources. Each of the 5 deposits also have different levels of gold relative to copper. 3 of our deposits are more gold-centric with copper credits. 2 of the deposits are more copper-centric with gold credits. Depending on who the partner is, they may choose to go after some of the higher-grade copper deposits first, which would increase copper production relative to gold, or perhaps stay with what we have in the pre-feasibility, because that's what drives the quickest recoupment of the $6 billion of upfront capital.
Yeah.
Gotcha. It seems to me like, you've got RBC working on this process. You're ready. They're doing it. I would guess, and I'm not asking you to confirm one way or the other because it's just a guess about the share price. I would guess that's a pretty decent little bump when that announcement is made. That's what I'm going to guess.
I sure hope so. As one of the largest shareholders in Seabridge, it better be.
Yeah. After all this time,
I think I agree with you, Dan. I think we get a big re-rating at that point in time, but I think there's an event that could come before that should help even before the joint venture is announced. So I mentioned what's unique about KSM. We're permitted. We have our permits in place. We received our environmental approvals in 2014. Initially, those permits were good for 10 years. They were set to expire this year, but because of COVID, we got a 2-year extension. So our permits are now valid until July of 2026. Fortunately, there's a mechanism in British Columbia known as substantially started, that if we can get that designation, the permits are then good for the life of the project. You can imagine that any big company looking at KSM wants to ensure that those permits are good for the life of the project, not that they have to start the environmental assessment all over again. So we decided 2.5 years ago, 3 years ago, to go out and raise the dollars without equity dilution to fund the early site construction that will get us to a substantially started designation. We've now built roads.
I'm just curious, is there a
Sorry.
particular milestone that the government recognizes as, okay, substantially started?
Unfortunately, I wish it was a simple formula. I'm a numbers guy that would
Yeah.
make it easy. What I will say is we've now spent a $500 million Canadian on construction activities, building roads, building camps, tying into the power grid. Another advantage we have is the government of Canada extended the hydro's power lines right past our project. So we're now building a switching station to take power off the line that's all hydro sourced, building fish compensation area and building bridges. We applied for substantially started designation in
Mm-hmm.
January, showing the government what we did. My experience in Canada, specifically in British Columbia, is that the government is willing to give you the approvals you're seeking, provided the First Nations are on
Oh.
side. Along with our application went strong letters of support from the Niska Nation, the Tahltan Nation, the Gitxsan Hereditary Chiefs, BC Hydro itself, and a bunch of the local communities. So I'm as confident as I think I can be in terms of saying that this is a designation we should get over the next 30 to
Mm-hmm.
60 days. And when it does, I think that is another unlocking of value to our shareholders, because that then opens the door for the joint venture discussions we're having, where the partner does not need to worry about the permits expiring. With that designation, the permits are basically good in perpetuity.
Yeah. That sounds like a serious catalyst to me. Um,
Yep.
potential, right?
Love lifetime. Yeah.
That's actually really,
Yeah.
yeah, right, right. Um, but it's a catalyst for something to happen between now and whatever date in 2026, right? That's pretty cool. I didn't know about that before.
Yeah, and you can imagine raising $500 million to do this work. How do you do that without dilution? Well, we were fortunate. We found willing partners in Sprott Royalties and Ontario Teachers Pension Plan, one of the biggest pension funds in Canada, where they actually bought secured notes from us, secured against the project, gave us the cash, and then we used that cash to do this construction activities. Those notes don't get repaid. They turn into royalties on the project at commercial production, and small royalties. So it don't really impact the project. Less than 2% of the project's value is essentially covered by those royalties. So it was a way to raise these dollars and do this work without, had we raised it through traditional sources of
Hmm.
equity, we would have diluted our shareholders by
Mm.
30%. We did it with zero dilution up front.
That's a cool structure. I like that. Um, and I've heard of various things like that in mining. Um, so maybe it's too early to even like think about this. Um, what's beyond KSM for Seabridge? Once that happens, once KSM is on its way and there's a major mining company, putting billions of dollars, whatever it was, 6 billion of capital or whatever. Does Rudi retire and live a life of leisure, or what's next?
I think I asked that question to
You
you a few
did.
weeks ago. Are you going to retire? And your answer is the same as mine. Why would I retire when I'm doing
So
what I love?
again,
What
yes.
comes next after Seabridge is we're not just a single asset company. We have another big asset called Courageous Lake in the Northwest Territories. We just finished a pre-feasibility study on that shows a very robust project there as well. This is an asset that we will likely sell. We think we should be able to get a meaningful upfront payment for that asset, and in addition, keep a stream on it against future production. Where we want to spend dollars is back in the ground in exploration. In 2016 or 2015, the bottom again fell out in the gold market. We took advantage of that and went out and started acquiring early stage projects again, and we now have three of them. In fact, one of them is called Iskit, which is situated only about 25 kilometers from KSM, which we think could be another KSM. We're spending $12 million this year Canadian on drilling there, focusing on gold, copper, porphyries like we have at KSM. So there is life after KSM within Seabridge.
Right. Yeah, I guess I actually asked two different questions, and I asked about Seabridge after KSM, then I asked about Rudi after KSM. So, um, it sounds like you got other things you want to do with the company. In other words, um, going forward.
Like I would love to stick around and see first production at KSM. I mean, I've been doing this now for 25 years. This project has advanced well beyond my wildest dreams. Why not stick around to see that first gold and copper come out of the ground? That would be pretty cool. In the meantime, there are other things we can do because the joint venture will take a long time to get to first production. But there's other things we can do in the other assets we have that we think can continue to drive value through
So you
offsetting
just
dilution
said
with
is
ounces in the ground.
projects at beyond your wildest dreams. Like, what were you envisioning at the beginning of all of this?
Well, to show you how conservative my exploration guy was at KSM, and he actually came from Placer Dome, which was the company we bought KSM from. When we bought this asset from Placer Dome in the year 2000, they had spent $25 million there. We bought it for $200,000. Again, showing the misallocation of capital by the majors. When we bought this asset from Placer Dome, they had delineated resources of 3.4 million ounces of gold and 2.7 billion pounds of copper. Bill Threlkeld, my global head of exploration, told me, Rudi, I think we can find another 5 million ounces there. It's probably worth owning. So that's how we went into this, thinking, yeah, it's going to grow. It's going to grow maybe 2 or 3 fold, but not to where it sits today. So,
Wow. Yeah, for sure.
I'm
And
glad he
just
was
going
wrong.
back to
Yeah, and
kind of where we started, where did the fascination with gold itself for you come from? You mentioned back in college, and then I guess shortly after you were trading gold, but where did it? I mean, where does that come from? Because it's not a common thing I hear.
No, it isn't. I hate to be called a gold bug. I believe there are times that you want to own gold. There are times when you don't. And I think right now we're entering to a very interesting new bull market in gold. I came into it as an undergraduate at Columbia. I had a professor, Malcolm T. Wayne, who was a gold bug. He was an elderly gentleman, mining engineer, a Scotsman. He went through obviously the gold market, Nixon shutting the gold window in 1971, and what gold was in terms of a financial asset, right? So he kind of got me caught up on the gold market, studying what it is, what drives gold prices, and I kind of got hooked. And
Interesting. Yeah,
I've been hooked
Scottish
ever
professor.
since.
All right, I got it.
Yeah, yeah.
a frugal Scot
Yeah,
got you interested in gold. Um,
So he would come into the classroom every week and say, "What's the price of gold?" And if you didn't know it, you were in trouble.
okay, yeah, that's pretty cool. And back then there was like probably no internet to check, so you know,
Well, think of the
yeah,
1970s. I mean, gold went from $35 an ounce when Nixon took it off the window, got as high as 852 an ounce by
yeah,
1980, and that was kind of my formative years starting out in the gold market.
yeah, yeah. I think it's sort of like um, all of the asset managers that we talk to who say, well, I first got excited, during the dot-com boom. And, they say, well, I got through it, I lost money or whatever, but I learned a lot and I was hooked and that was it. So, of course, gold peaked at 850 and wound up, like you said, at 260 many years later. So
Yeah,
that's a pretty cool, um, it's a pretty cool story, actually, uh, because nobody like I was a music major, but nobody I can't name anybody who I had in college who excited me about anything but music. Those other classes, I always thought, God,
yeah,
these people are all communists. I can't stand this. Get me out of here. You know. so so the fact that you had a Scottish guy talking about gold, lucky you is all I have to say. I wish I'd had a Scottish guy talking about gold in one of my classes. you know,
yeah. No, it was
yeah,
pretty cool.
yeah, it's great. It's a great college story considering all the college nightmare
yeah.
stories that we hear, even from that period, and they get
Right.
worse over time.
Yep.
Um, so you think we're in the beginning of an interesting new um, gold bull market? Um, why?
Well, I think right now you're seeing a huge transfer of physical gold from the west to the east. The last bull market in gold that we can point to was like from 2008 to 2012, when gold went from about $750 an ounce when the financial crisis began to about $1,900 at its peak. That bull market in gold was driven by Western investors' speculation in paper gold. They were buying contracts on the COMEX, and they were buying gold mining stocks. Today, what we're seeing is a bull market that's driven by investors coming in for physical gold. Central banks, sovereign wealth funds, Asian high net worth investors, they don't buy mining stocks or paper gold. They're buying the physical gold. And when you look at the Western investors' exposure to gold now, it's down 75% from where it typically is over the long term. Throughout my career, if you looked at pension funds or other large sources of capital, you would typically have 2 to 3% exposure to gold within a balanced portfolio. Today, it's less than 1/2 of 1%. If you look at the holdings of physical gold in Western ETFs, like GLD or PHYS, the Sprott Physical Gold, it peaked in 2012 when gold hit 1900 at about 3,300 metric tons. Today, it's barely above 1,500 metric tons. Yet gold is at an all-time high, but the Western investor is puking out gold. If you look at gold mining stocks, back in 2012, Seabridge hit, I think, in the mid 30s per share. Today, we're trading at $14, $15 a share. Gold equity valuations have been decimated. The Western investor has abandoned gold. Investors are coming from around the world, and they're buying gold because it's not the dollar. They want out of the dollar. And gold is a great source to get out of the dollar with. It's actually now starting to find a way in international trade, which is why the BRICS nations and China and Japan and everyone else is loading up on gold. But they don't buy gold mining equities. And there lies the problem with the gold industry, is the typical investors in the gold space are no longer investing in it. So I think someone that's running a gold mining company like myself, we need the Western investor to come back to the table to generate valuations that we all think we should have with gold at $2,400 an ounce.
Yeah. So two things. It's a great way to get out of, dollar, yen, euro, pound, anything. I wish my, dollar-based gold was performing the way the yen-based gold is performing. I wish I had that
Right.
relative trade. And I've also noticed, the same things about the gold trade, right? Gold equities and people puking up gold, as you say, just the low pension fund holdings and all that. But what I want to know from you, Rudi, is if you have any thoughts about Bitcoin as a gold competitor. Like, no matter what else you might think of it, as a gold competitor, it's got to be, if you think about gold, that has to be on your mind to some degree, doesn't it, or no?
I think at the margins they
Mhm.
overlap, but you have to understand that the gold market is much larger than the Bitcoin market, just in terms of scale of assets under management. Um, One is a risk-on asset, one's a risk-off asset. Gold has a 6,000-year history for preservation of wealth. Bitcoin is more of a trading instrument. The greater fool theory that if I buy it today, I can sell it, at a higher price to some person
Mhm.
down the road. Gold is a way to preserve wealth. That's what it's been used for a long period of time, and that's no different today. I wish I was smart enough to invest in Bitcoin when it evolved. Most guys either love gold or they love Bitcoin, but
Mhm.
not both. There's one individual who I think you read on a regular basis, Dan, is Luke Roman. Luke
Luke
Roman is
Roman.
one of the few macro strategist that actually is bullish on both gold and Bitcoin at this point in time for
Mhm.
different reasons. I miss the Bitcoin trade. Quite honestly, I have people try to explain why I should own it, what's really supporting the value there. I don't get it. And if I don't get it, I can't invest in something.
Right. Okay. So, I mean, you're taking it seriously anyway. You're not investing in it, but you understand that it's out there. It's serious. Um, yeah, we're trying to get Luke. I've tried to get Luke on the show before. He won't. He's just not interested. If you know him, nudge him for me. Um,
I think I can help on that. I'll give
okay.
it a shot.
Good. Thank you. I'd appreciate it. Uh, All right. What I want to know is, and I was headed this way with my previous question about what's after KSM, but like making a deal that gets KSM developed and turned into a mine, that is a major that's the milestone of milestones for you. And at that point, it it's sort of it's what you've been working toward, but the company looks different at that point, doesn't it? I mean, you're no longer simply developing the asset. You've partnered with someone, and in one way or another, you're kind of in the mining business. I know you're not going to build and operate a mine, but I wonder, and this is sort of typical in the space. I've seen companies sort of evolve and their business model evolves, even if they say doing the same basic thing. Does do you see um, do you see Seabridge kind of evolving the business model? Like we know what it looks like right now. What does it look like in 10 years, do you think? Very similar, very different?
Oh, there's I love that
Okay.
question, Dan, because what we have in mind is very different than what you get investing in other gold
Hmm.
mining stocks. People buy gold mining stocks expecting exposure to the gold
Yep.
price. They're not getting that. If you look over the long term, the large mining companies have significantly underperformed the gold price in a meaningful way. Our goal at KSM is we will take back our share of profits from the project in the form of physical gold. We'll take that physical gold and deposit at a physical ETF in exchange for shares, like Sprott's Physical Gold ETF, and then we'll dividend out those shares that we get back from depositing our gold to our shareholders in the form of a dividend. So you, as a shareholder of Seabridge, you get a share of this physical ETF. You can sell it if you want the cash. You can hang on to it because it'll give you further exposure one to the gold price, or you can turn it into physical gold. PHYS is the one physical ETF that allows you to turn in your dollars and take back physical gold that's backing it. So we're truly looking to create the company that when you invest in Seabridge, the ultimate end game is you're going to get back physical gold for your investment.
I love that.
Man,
Yeah.
that's cool. Why didn't I never hear? I've never heard you say that. I guess I haven't paid enough attention to Seabridge over the years. That is really cool. Who came up with that?
It's been tried in other companies before. There was a silver company not too long ago that tried to do that. There was a small gold company in the US that was trying to do that, but not to the scale that we can. So when you look at KSM, um, when in production, this project will produce over 1 million ounces of gold a year for the first 33 years, and then probably another 50 years beyond that in terms of mine life. And then we still haven't even exhausted the known resources today. We're trying to keep somewhere between 35 to 49% of this project, meaning that we'll have back to us 35 to 49% of the physical gold, with some of that gold having to be sold to cover the operating costs and the cost of production. So when you look at 35% of 1 million ounces coming back to Seabridge, that's a lot of gold flow every year. Um, that's a meaningful amount of gold that'll have a meaning to our shareholders. To put it in dollar terms, at today's metal prices, this project generates over $2 billion of free cash flow a year right out of the gates. If we can keep 35% of that, that's $700 million of value coming back to us in the form of physical gold. Our market cap today is 1.3 billion. Give me a multiple on that of 15 times. You can kind of see where the share price can go
Yeah.
over time.
Oh man, I'm sitting here wondering. Let's see. Do Stansberry's rules don't let me buy Seabridge if I recommend it in my newsletter? But what about if I talk about it on the podcast? Because it just sounds like something you want to be a part of. It's
Yeah, so one of your goal guys, you
of
know
course.
John
Oh,
Judy.
absolutely.
John Judy
One of the
retired
all-time greats.
recently. I've known John for I've known John for over 30 years. I think he was one of the best gold analysts
Hmm.
on the planet in terms of the
Hmm.
work he did. He couldn't own Seabridge because it was listed in one of his top 10. He's now out on his own again with his new newsletter, and I think I can tell you pretty confidently that he now owns
Yeah.
Wackers.
Right. Yes. I
Yep.
yeah.
It
I
makes
didn't
me.
realize. I
Yeah.
didn't think of that, but he would always say that he always wanted to own these things. So yeah.
Yeah, and now he
Yeah.
can. Although he's reduced his top 10 list to his his Fave 5 list now, as he calls it.
I noticed that.
And yes, we're on that
Yeah,
list.
I noticed that.
Yeah.
It's pretty cool. I haven't talked to him, since then, but I'd be curious to know why
Yeah.
he reduced from 10 to 5. I guess there's only 5 that he likes anymore, maybe. Um, but I agree. He's one of the all-time greats, like one of the great, certainly just in our business, like, the top gold guy as far as I'm concerned. Nobody, I remember years and years ago, I first opened that newsletter, and I'm telling you, it was just like pages of tiny, type with data everywhere. I'd never seen anything like it. But you get used to it pretty quick when you realize what he's trying to do for you. Um, and nobody has that kind of a track record either with gold stocks. He really was quite
No,
unusual, quite unusual. Yeah.
very much so, and
Yeah.
still is,
Yeah.
I think.
Yeah. He's still John. He's
Not many people start a newsletter at the age of 80.
That's right. That's right. Not many people start a newsletter at the age of 80. That's well said. Um, okay, so
Yeah.
I guess we have an idea of where we're going to wind up in 10 years, and it sounds amazing. I can't wait to have you like back on the show when that starts. I hope I hope I'm still here to do that. Um, what about the question you asked me? We mentioned this earlier. What about the question you asked me? And pardon me, like my audio has been going in and out through this entire interview. So if I sound like an idiot half the time, that's because I haven't heard a lot of what you said.
Yeah.
But the question you
There
asked
it
me
goes
when
again.
we caught up in
Come
Florida
back.
recently was, "Are you ever going to retire?" And it seems like you never are. If I had to guess right now, I'd say,
No, I love what I do. I've got decent balance in my life. We have 2 grown children. Hopefully, we'll have grandchildren one of these days. Everything we hear from our friends about having grandkids, it's like the next best thing in life. It's the gift of God for not killing your children. Um, but no, I don't see myself retiring, Dan. What I'd like to do in my career, I look back over my career, and I had 3 very influential mentors
Mhm.
over my career. Each one building a different skill set that I think I have today. I'd like to maybe start to fill the role of mentorship with other people in the industry. One problem with our industry is we're not graduating enough people interested in mining these days. It's a
Yeah.
shame. When I went to school, Columbia University had the oldest school of mines in the Western Hemisphere, dated back to the early 1800s. Nobody knew that,
Wow.
and yet they don't have a school of mines
Mm.
anymore. We don't have enough people graduating with mining engineering degrees, metallurgical degrees, geophysical degrees. We need to bring more youth into the industry. So I'd like to spend more time in the classroom, maybe at a young age, and I'd like to kind of serve the role at some point of mentoring people that would like to, you know, build their career as they go
I think
forward.
I heard the average age of people in the mining industry today is like mid 50s or something, which,
Yep, I
Yeah,
think
and you're
that's
hearing
right.
about that in a lot
I
of
think
different
that's right.
industries now with, with the baby boomers, with small businesses and whatnot, like the children not being like as interested in them and that sort of thing. I guess it's not unique to your industry, but yeah.
No, I think a lot of that revolves around environmental groups go into classrooms at a young age and teach that mining
yep,
is bad without really fully appreciating that we need
Yeah.
mining, how important it is in
yeah,
everyday life. Um, I think we need to do a better job as an industry to get into the classroom early to open the eyes. We're all talking about, the build out of green energy initiatives, electric powered
yep.
vehicles, you know, how much copper
I
is going to be
know.
needed going forward in the next 10
Yeah,
to 20 years. I'm not sure where these estimates are made, where this copper is going to come from. I can tell you firsthand that from discovery to first production of a major copper mine is
yep,
25 years. There are no
yep,
shortcuts. So to think that we're going to have all this demand for copper and all of a sudden the mines are going to supply it, it's
yep.
laughable. It's
Yeah, we've
absolutely
talked about that.
laughable.
Me and Dan.
I
Yeah,
love
yeah.
the Friedland quote from a couple of years ago. we're going to need 8 new Escondida mines, the largest copper mine in the world in Chile. I think it's like a 1.4 million production per year. And he says we're going to need 8 of those, by like 2035 or 50 or something. I forget the date, but pretty soon. And we don't have time to get 8 of them. And by the way, like the 8 deposits don't exist. You know what I'm saying? So it's
Right.
so
Exactly.
yeah. Yeah, that's an interesting part of that
Yeah.
story. And even with that, even like if you listen to what Freeland says, he's talking about normal GDP growth. He's not talking about necessarily like green energy transition or anything else. It's like normal GDP growth, 8 Escondidas. We don't have them, So it's hard to sort of make this case. And unfortunately, history tells us that you won't make the case until copper's $10 a pound. And then you'll go, now do you get it? You're right. Like that's the way it'll be.
Yep. No, it's very true. It's you asked me earlier on, Corey, how important is copper in our joint venture discussions? It's critical. It's a critical metal, and it's important in terms of for new sources of copper need to come from safe jurisdictions. And here's KSM situated in Canada, one of the best mining jurisdictions in my view in the world. And a project that can produce a lot of copper from multi-generations.
Yeah, no,
All
of our
right.
stuff, all of the stuff we use has to come from somewhere.
Yeah.
So.
Yeah.
Yep.
Like the green guys going into classrooms saying mining is bad and then pushing, windmills and solar panels and electric cars. It's like, and batteries, you're just like scratching your head going, do you know how much mining this takes? And none of it makes any sense. But they'll learn, won't they? They'll learn. Yep. I want to ask you my final question, Rudi. It's the same question for every guest, no matter what the topic. It's financial, non-financial, any topic. It's always the same question. If you've already said it, by all means, feel free to repeat your answer. And the final question is simply, if you could leave our listener with a single thought today, what would it be?
It's a loaded question, Single thought. So if you believe that the gold price is poised to go higher, if you believe the Western investor will finally wake up and want some exposure to gold, if you believe that the world's going to need a lot more copper in the foreseeable future, Seabridge in one-stop shopping gives you everything you need. More ounces of gold per common share, more pounds of copper per common share, in a market right now in terms of gold equities being very depressed. Stansberry put me on the map. Steve Sugarwood first recommending the stock in 2002. And I think last time I looked was still in the top 10 Hall of Fame on a 995% return. I believe that the future for gold and copper is phenomenal. And if you want exposure to higher copper and gold prices, I can think of no better way to get that than owning a share of Seabridge.
All right. Well said. I know you have a lot of people in Stansberry agreeing with you on that one. Listen, Rudi, thanks a lot. I'm so glad I ran into you and that we could get you back on the show. And I'll try not to make it so long next time.
Well, I don't mind the length. And Corey and Dan, really appreciate it. It was really fun to catch up. And these podcasts are very enjoyable.
Good to have you.
Glad to hear it.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.